Sunil Koul, the Global Emerging Market Equity Strategist at Goldman Sachs, joining in on the show right now. Sunil, hi, good to have you on the show. Sunil, I was just going through your report, which talked about as to how local headwinds seem to be stabilizing. And you've mentioned that, the GDP growth has likely bottomed out with the gradual recovery that you're expecting. Tell me, what are the primary drivers behind the projection recovery to 6.4% of a growth rate in calendar year 25, and especially at a time when we're talking about a global slowdown led by US?
Yeah, sure, Aisha. First of all, thanks, welcome, and thanks for coming, inviting me back. Look, I think we still think that the September quarter number was the trough in terms of GDP growth. We are actually expecting the recovery, which is kind of in line with what the street is expecting as well. But I think the key point is what you just mentioned, is that the recovery we think will be gradual. Partly because we think policy at the margin is still somewhat restrictive, right? Because we still are looking for fiscal consolidation this year, even though the extent of fiscal consolidation will be lesser this year than it was in the previous year. So there will be less drag on growth. But at the same time, I think the monetary policy is turning supportive, with RBI both easing liquidity, but as well as sort of cutting rates. And obviously, the macroprudential measures have also somewhat turned more favorable. So at the margin, I would say policy is turning somewhat favorable, at least on the monetary side. And then we are also expecting some pickup or recovery in the consumption. Again, when we think about consumption, as we know, Aisha, I mean, there is the high-end consumption, which still has been holding up pretty okay. There is a mass market consumption, which has been slowing down. We think there things might start to improve in a couple of quarters. And then there is the rural consumption, which actually has been actually picking up quite a bit from lows, because the sowing season has been decent. I think barring any weather shocks, if the harvest is okay, we actually might see an improvement in the rural economies. I think the private capex obviously has been lagging, but the improvement in sort of policy, as well as kind of consumption picking up a little bit, and exports still holding up, should get us to a recovery in growth. But I think the key point is that the recovery will be somewhat gradual than what I think the markets are anticipating.